Well, there we have it. I've been waiting patiently for Powell, the Fed, and all these rate hikes to finally take a toll on the U.S. financial system. I have to say I've been impressed seeing how much they've been able to hike rates without a financial crisis. But it seems now we're finally at the dawn of one. We've had our first bank collapse of this cycle, and it's happened a lot faster than Lehman. For those of you who remember the Lehman crisis back in the start of the '08 crisis, Lehman might have gone all the way back into 2007. It took a while. Like, people were discussing it on TV. You had nights and nights of Jim Cramer saying, no, it's fine. You should still buy Lehman. I see that it's down, 99.9%, but Lehman's on sale, guys. This is a buying opportunity of a lifetime and all this nonsense. And then eventually Lehman went bust anyway. Well, Silicon Valley Bank, it pretty much all went this week. I'd never heard of Silicon Valley Bank before this week. And then all of a sudden it just started crashing, and now it's already gone. It's shut down. The FDIC has boarded up the windows, and they're beginning liquidations to try and preserve whatever money's left to pay out the depositors. And of course, FDIC insures up to $250,000 in each account. But this is Silicon Valley we're talking about, where this bank is based. This is the tech bros who put their money here. This is the startups. There are a lot of big accounts at this bank. It's the 16th largest bank in America, apparently. And so, sure, if you just happen to be an ordinary person in Silicon Valley and you had your money there, and frankly, in Silicon Valley, I don't think that $250,000 is actually a whole lot of money. Cost of living is so insane in most of California. You don't necessarily have to be a rich person to have $250,000 in the bank, I wouldn't think, at any given time. But anyway, besides that, you've got all these companies that who issue checks for payroll out of accounts at Silicon Valley Bank, and all that money's gone. That means, today's Friday. So maybe paychecks went out on time, but next week, nobody's getting paid. All of these other companies are going to have to close. That is, unless the federal government rides in for a bailout, but we'll get to that in a minute. But for now, it's over, tech bros. You're done. I don't think it's a coincidence that Silicon Valley Bank would be the first bank to collapse in the middle of this massive tech bubble. It's hard for me to imagine a company that would be more bubblicious than a bank that caters to businesses in Silicon Valley. Apparently, USDC, which is a stable coin, I believe it's the second biggest stable coin after Tether, so it plays a big role in the crypto market. I think actually, they haven't said yet, but some portion of their cash reserves, which is supposedly backs up their USDC. Now, I think I'm on the record. I don't remember if it was on this channel or not. Hopefully it was, so that I'm on the record. All the way back when Tether was new, or when it first was becoming prominent, speaking out against the stable coins, in that I think that they are fundamentally unsound. I think that they're no different than fractional reserve banking. In fact, they're worse than fractional reserve banking because they're not, to my knowledge, none of them are, or at least none of the big ones like Tether, certainly, they're not convertible on demand. So they're not really backed by anything except for the confidence of the users. But in the case of USDC, if these cash reserves, which I believe holders of USDC can access anyway, I believe that if these reserves are called into question, that certainly would cut into the confidence that people have in USDC, which you wouldn't have to worry about if your stable coins were convertible into cash on demand, but they're not. And so you have to be worried about this coin trading at a discount versus paper dollars. And so this is going to have probably a big impact on the crypto market, I would imagine. And who knows how many of these crypto companies were customers of Silicon Valley Bank. I mean, we're half a day into this crisis, and do you think that Silicon Valley Bank will be the last bank to go belly up? Powell says, he promised us the rate hikes are still coming. There are going to be more rate hikes, as there should be, as far as I'm concerned. You already have the tech bros whining, wanting bailouts for a Silicon Valley Bank, and saying, oh my gosh, this is terrible. What if the whole banking system collapses? Yeah, because there is I mean, seriously, that's how unstable banks are. That if one bank goes bankrupt, one bank goes out of business. Think about how many businesses in any industry go out of business all the time, like restaurants. Restaurants go bankrupt left and right. Yet is anyone concerned about the whole restaurant industry collapsing because one restaurant goes out of business? No, you know why? Because they're not Ponzi schemes. People want to go out and eat. And as long as that's the case, restaurants will be a viable business. Now, not every individual business will be viable, but the industry itself will be viable. Banks, not so much, because banks are a scam. And so the truth is that all banks are bankrupt, in the sense that if everyone went to the bank to get their money out that they are owed, the banks don't have enough money to pay everybody. Everyone understands that, or at least I would hope. Most people, I think, were of a... Well, I shouldn't say that, not most people. Maybe 20% of the population, I think, really grasps that. Probably less. I'm being generous in saying 20% of the population. But they don't have your money. And what happens is when one bank goes bankrupt because too many people try to pull out their money at once, and as we all know, the bank doesn't actually have their money, they go out of business. The FDIC shuts them down. And then what happens is people who bank at other banks say, you know what, maybe I don't want my money in a bank either. People start to wise up, and they say, you know what, this whole banking system doesn't seem very safe. And so people use common sense, and they say, you know what, we don't like this. We don't like this system. And then banks start to go bankrupt left and right. And the bankers don't like this. So they have to control the narrative. They have to fool people into thinking that their money is safe, that their money is secure. When it's not, it never has been. This is where the idea of a bank holiday comes from. We think of a bank holiday as a day when, only the bank is closed, and the post office. But no, a bank holiday is when the government used to come in and say, you know what, nobody can pull their money out of the bank today. Because they knew if they did, then all the banks would go out of business, and the bankers would get upset with the politicians that they own. And so there's a long, long history of money and banking in the United States. I don't have the time to get into. I believe Murray Rothbard wrote a book, actually, on the history of money and banking in the United States. Just called that. I think it was called The History of Money and Banking in the United States by Murray Rothbard. I recommend you all giving it a read if you're interested in this topic, because I don't have a time to summarize everything that book covers, plus everything from then to the present day. I think that book was probably written in the 70s. But basically, every law and regulation that's been passed in the United States since the founding of the country, aside from Andrew Jackson's brief revolution, or not even that, brief revolt, it wasn't a true revolution, against the bankers, everything that has been done in this country by the government has been in the interest of helping the banks defraud their customers. They make it easier and easier for banks to, stay in business, and harder for customers to get at their own money. And they've even tried to criminalize people who, criticize this and say, hey, you know what, maybe the banks are not the best place to put your money. Everything has been in the interest of preserving, extending, and enriching the present system, while condemning, outlawing, even to the point of criminalizing alternatives to our present banking system. Because it's not that I hate banking itself. I think banking is, a crucial foundation for economic society. You can't have an advanced economy without financial intermediation. But it's just that our banking system is completely corrupt and inherently unstable. And the banksters will admit this themselves. They're the first ones, because what do we see today? All over Twitter, with Silicon Valley Bank going bust. The banksters and the finance bros, the guys in the fleece vests, what's his name, the Glenn Youngkins of the world, they're on Twitter screaming, crying like scared little girls, saying that there has to be a full bailout of Silicon Valley Bank. Why? Because if there isn't a full bailout of Silicon Valley Bank, the pores will start to wise up, and they'll start pulling their money out of other banks, and the dominoes will begin to fall, and the whole house of cards will come crashing down upon them. And their excuse, hey, you don't have to like us banksters, if to prevent a collapse of the system, because everyone else will get hurt too, because the FDIC doesn't actually have enough money to back up all of the, all of the depositors, even at $250,000 and less. And so they put a gun to our heads. They say essentially, if you don't save me, I'll kill you. I'll take you down with me. This is the sick, toxic relationship that exists between the banksters and the rest of America. Imagine the gall of a restaurateur who, on his final night, on his final service before he's forced to shut down his restaurant, he locks the door shut with everyone inside and fires a gun in the air and says that he's going to start wasting hostages unless everyone pools their funds, unless the whole town comes together and puts up the money to keep his business open for another month. And imagine if every time he runs out of money, every time he's about to go bankrupt, he does the exact same thing. He pulls the same scam. He locks the door with everybody inside and puts a gun and starts putting guns to their heads and threatening their children, threatening their families. This is what banksters do every few years when their house of cards starts to collapse. And you know what? It used to be much more frequent. It used to be about every 18 months because that was, before the Fed. And the Fed does everything that they can to prop up these guys. The Fed gives them as much free money as they could ever want, to the point to where, deposits are almost meaningless to most banksters. They don't care. That's why they don't give you any money for your deposits, because they don't need them, because they can get all the money they ever need to make loans to the Fed. And even with that, even with an unlimited supply of money to loan out, I'm trying not to use too much profanity, but these people, let's say, which they're not people as far as I'm concerned, they're subhuman, they still go bankrupt. They still go under. And why is that? Because they've never had consequences. There's never been any consequences for them. Ever. The system has collapsed countless times throughout American history. And America is a pretty young country. Think about all the other countries in which they all now use the same stupid system as us. And it's a fairly young financial system. I mean, it really goes back to the creation of the Bank of England. I think that was the first fractional reserve bank. But it's spread around the world because, it turns out banksters like getting risk-free money. It is quintessentially privatized profits and socialized losses. That's what America's all about. And so that's why I don't think this will happen, but I wish Powell would stay the course. I wish he would keep hiking rates. I wish he would ignore this situation and let them all collapse. But at the end of the day, he's not going to do that because the Fed's job is to prop up the banks. That's who created the Fed, and that's the Fed's purpose. The Fed is the vanguard of the banks. The Fed is the banker's bank. The Fed is supposed to be there to bail out the big banks when they start to feel the heat. And Silicon Valley Bank was a big bank, 16th largest in the country, we're told. And I think that's in terms of deposits. I think they had the 16th largest, deposits in monetary terms, i.e. in dollar amounts, not necessarily the 16th largest in terms of total depositors. And that's not surprising, considering that they are from a region where so much money exists. I mean, it's just money. They deal with tech bros. So anyway, we got Eric Swalwell, who I guess is the local congressman there, trying to orchestrate a full bailout of Silicon Valley Bank. Eric Swalwell, supposedly overtold, oh, the Democrats, they don't like big business, and they, they're looking out for the little guy. That's, I mean, I guess most Democrats don't even try and keep up that shtick anymore. The Democrats are as corporatist as the Republicans, and so just like if this were a Republican congressman, Swalwell is acting on behalf of the banksters, and he is going to go to Congress and beg Congress for a bailout of this bank, full bailout, beyond the FDIC insurance, and he's probably going to get it because they love bailouts. And this bailout isn't even very hard. I mean, think about how much they've bailed out Ukraine. They're paying the teachers' union pensions in Ukraine. So you think they're not going to bail out an American bank? I mean, America's been bailing out banks forever. So it's not even a stretch. These folks are going to be made whole. But if they're not, then we will see, as I wish would happen, the crisis accelerate. Things will start to domino. But that's what needs to happen. The collapse needs to happen. I've been saying that for years. This is what I've been talking about. Look at how fragile this all is. And they're all saying it. Well, at the same time, for all these years, we've been told, oh, no, the system's very safe. Not just banking, the whole financial system in general. Oh, no, you're crazy. Everything works out fine. And, and even though implicitly, I mean, I knew that this was not right, I thought, well, maybe this can just go on forever because nothing ever seems to be changing. I've had this channel now for 6 years. Or maybe not 6. Maybe we're going on... I think... No, this is probably just the 4th year, now that I think about it. Because was it 2018, early 2019? I can't remember if it was the beginning of 2018 or the beginning of 2019 I started this channel. Somewhere around there. 4 or 5 years. And a common theme has been that the system is not stable. And that one of these days, there's going to be somebody who strikes a match and sets the whole thing ablaze. It's our whole financialized economy has been a bubble in search for a pin for a very long time. And usually that pin comes in the form of rate hikes, which we saw towards the end of 2018, which would have led to a financial crisis back then. Then we had the great Powell flip-flop. And, yet here we are, all these years later, Powell's hiking rates again. And the air is starting to come out. Let's see if Powell's able to flip-flop again. I mean, I don't know. I won't put anything past him. But it would be remarkable. I mean, this is already a remarkable business cycle. Think about it. 2008 was 15 years ago. 15 years. You go 15 years without a financial crisis, without a collapse in credit. Think of all that bad debt that's been accumulated, all that trash on all these balance sheets. It's a nightmare. But it's what we deserve, it's what needs to happen, and it's not going to go away until we just muddle through. So, with that said, I will see you folks back here tomorrow.